So my last slide for tonight is about conceptual framework. Take note that conceptual framework, as a spoiler, is not an accounting standard. It is always being asked to you for the theory side, diba? It's not an accounting standard, but somehow serve as a guide. As a guide for us, for different accounting practices and different processes we are providing. So as accountants in the profession. So far for conceptual framework, some were already tackled or mentioned in the previous slides, so we're gonna skip those slides or part, maybe. Walang makita slide. So our learning objectives is to state the purpose, status, and scope of the conceptual framework. I'll upload everything in our Canvas. State the objective of financial reporting, identify the primary users of financial statements, and explain briefly what are those qualitative characteristics of useful information, what are those falling under qualitative characteristics and enhancing qualitative characteristics maybe, diba? And somehow some are getting confused with such. And the different elements of financial statements, which are 5 elements of financial statements. So let's start with this slide, the purpose and what is all about conceptual framework. Again, I mentioned a while ago, these serve as a guide. So it prescribes the concepts for general purpose financial reporting. Its purpose is to assist. As you can see here, the keyword is always assist. First one, assist the International Accounting Standards Board in developing standards that are based on the consistency approach or concept. So it serve as a guide, it serve as to assist the International Accounting Standards Board. Letter B, to assist again, this time not the board but the preparers. The preparers of those who are applying or using the different accounting process or accounting standards for financial statements purposes. Assist preparers in developing consistent accounting policies when no standard applies to a particular transaction or when a standard allows a choice of accounting policy. And finally, to assist again all parties in understanding and interpreting the standards. Yes, nasa purposes na ako. Anong nakikita niyo? Rawal. Ayan. Purpose of conceptual framework.
Oh my God, Ate Sarah.
Okay na ba? Nasa ayan, nag-log out. Ayan, can you see my screen? It should be purpose. We are in purpose.
So, birthday mo, nagpapalayas ka?
Yeah, purpose of conceptual framework. Can you see now? Okay, I'll move now. After purpose is the status. Ayan na. Tama ba? You can see status. The status of the conceptual framework. Yes, okay. The status of the conceptual framework. This is what I'm talking about a while ago. The conceptual framework is not an accounting standard, no? This is not an accounting standard. When there is a conflict between the conceptual framework and the accounting standard or PFRS, the PFRS will prevail. So pangalawa lang si conceptual framework. However, in the absence of a standard, the management shall consider using the conceptual framework in making its judgment, in developing and applying the accounting policy that results in useful information. Okay? So I hope you remember the status of the conceptual framework. Not an accounting standard, not a PFRS, but serve as a guide. Just in case an accounting standard or PFRS does not exist, conceptual framework can be used as a guide. Okay? The scope of the conceptual framework, from the objective of financial reporting down to qualitative characteristics, financial statements and reporting, the elements, recognition and derecognition, measurement, and the concept of capital, yung sa dulo niyan. The concept of capital sa dulo. Okay, let's start with the scope of the conceptual framework. First one, you should remember the objective of general purpose financial reporting. Magkakamukha lagi yan sa choices, pero ito lang ang kailangan nyo makita lagi. The main objective of the financial reporting is to provide financial information, this is the first slide or first part, about the reporting entity that is useful to primary users in making decisions about providing resources to the entity. So ang hanapin nyo na lang, the objective of financial reporting under conceptual framework is to provide financial information, a useful one. And as you can see, the keyword. The next half of the objective is for making decisions, decision-making purposes, no? About providing resources to the said entity. So hindi dapat iisa lang. Baka kasi ang na-encounter yung choice or pinipili nyo is decision-making or making decision. Tama, na purpose yun ng financial reporting. But it's not complete as to objectives. Dapat dalawa. Provide financial information that is useful, tapos in making decisions for the end users, which is practically the entity or the other different stakeholders. Diba? Baka kasi ang nasa choice lang, provide financial information. Okay, tama naman, but it's not complete. The objective should be complete and precise, from providing the financial information and the useful one for the user's decision making. Okay? Therefore, the objective of general purpose financial reporting is the first part of conceptual framework. It is the foundation and it was never changed for the past years. Okay? Let's move forward. Primary users. Pag sinabi nyo naman primary users, usually there are only two. Please remember, there are a lot of users, but when we talk about primary users, as you can see, letter A, investors, letter B, lenders and other creditors. The rest are users, yes, but if the question is primary users, dalawa lang sila. And as you can see, those users are external users. Yeah? So primary users are those who cannot demand information directly from reporting entities. And of course, as I mentioned, investors, lenders, and creditors or other creditors. So only the common needs of primary users are met by the financial statements or yung subject nyo for financial reporting. So please do remember, primary users. Maraming users. For external kanina sa mga previous slides natin, we can have customers, we can have competitors, the government are external users, but these are the primary users. Okay? Internal users, the management, the employees. Let's move forward. This one. Students for this series tend to get confused the qualitative characteristics, but should be the foundation as far as conceptual framework is concerned. Just take note, when it comes to qualitative characteristics of financial information, it's divided into two, as you can see here. The first one is the fundamental. The fundamental qualitative characteristics only under which is only two fundamental qualitative characteristics. Only relevance and faithful representation. Therefore, the rest are enhancing. Okay? Qualitative characteristics are only two fundamental qualitative characteristics: relevance, faithful representation. But I believe the updated one, somehow other authors would mention relevance as a main point of emphasis for fundamental. However, the rest should be enhancing. V-cut, apat lagi. There should always be four enhancing qualitative characteristics. What are those? Later on, we will define V-cut, enhancing. When we talk about enhancing qualitative characteristics, verifiability, comparability, understandability, and timeliness, VCUT. A while ago, fundamentals, relevance, faithful representation. The rest, enhancing, VCUT, verifiability, comparability, understandability, and timeliness. However, for relevance, it falls under such different items, specifically predictive value and feedback value, only related with relevance. For completeness, neutrality, and free from error, related with faithful representation. So don't get it interchanged. You will get a wrong answer. Okay? Relevance, predictive, and feedback value only. Faithful representation, connected with completeness, neutrality, and free from error. And the enhancing VCUT for enhancing qualitative characteristics. Let's define everything. Let's not be confused. For fundamental qualitative characteristics, these are the characteristics that make information useful to users. Okay? The keyword is the information is useful to users. For enhancing, as you can see, these are the characteristics that enhance the usefulness of information. So additional, add-on for enhancing. The main the main purpose or the main qualitative characteristics for the said information are the fundamental one, the main emphasis. However, for add-on, sa enhancing lang siya. So kung wala siya sa enhancing, malamang nasa fundamental siya and vice versa. So don't get it interchanged. Let's go with definitions. So just remember, when it comes to relevance, information is relevant if it can affect the decisions of users. No? It's totally different. It's a totally different definition because it only emphasizes the relevance emphasizes only the decision-making side of the users. No? As contrary, a while ago, we encountered materiality. Diba? In materiality, as you can see, this is an entity-specific aspect of relevance. So that's the main point of difference between the definition of relevance and materiality. On the general perspective, we have relevance, but on the specific one, we have materiality. But as you can see, both of them should affect or impact the decision-making side of the users for the said financial information. Okay? But if it affects decisions of users, relevance. Specifically, we might omit the said information that might impact the decision-making of the users, materiality yung sa side na. So don't forget the definition of relevance. The keyword is the information affects or can affect the decisions. Lagi yan for users. And there are ingredients. There are two main ingredients of relevance. Take note, predictive value and confirmatory value. Don't forget the definitions. When we say predictive value, the information can be used in making predictions, of course, or in short, future-based or future-oriented decisions. Future, predictive nga kasi future ang pinipredict, no? Example, for inflationary economies, of course, for predictive value, malamang mataas yung costs ng mga related items or resources. That's the predictive value. You might intend to not purchase or acquire new resources or assets because of its higher amount or cost, diba? Predictive value, future-oriented. Confirmatory value. The information, as you can see here, can be used in confirming not the future this time. You confirm the past, of course, because the information was already done and the transaction was somehow maybe already done as well. So the information is existing. You're gonna confirm if the said information is really the actual or realistic information for the said transaction. So confirmatory value. Confirm the past, not the future. If it's future, predictive value. That's the main point of difference. So don't get confused. Okay? Predictive value under relevance, future, making predictions. Confirmatory value, past dapat yung relation niya. Next, so relevance ang mas confusing. Sa faithful representation, we already identified the basic term, what is faithful. Diba? When is the chance that you are faithful, diba? For others na hindi faithful, ito ang definition. For faithful representation, it means that information provides true, correct, and complete depiction of what it purports to represent. Faithful representation, you became honest with the information that the entity is incurring losses. That's why you presented it in the statement of comprehensive income. The entity is incurring more liabilities than its assets. That's why you present it in the statement of financial position, right? Yeah. When it comes to faithful representation, guys, are you still there? For faithful representation, it means that, ayan, okay. Okay, thank you. Thanks for confirming. Mm, faithful representation na kasi usapan. Baka kasi tumahimik na nung naging faithful ang usapan. Completeness, neutrality, and free from error. So, completeness, all information necessary for users to understand the phenomenon being depicted is provided. Of course, complete from the self-explanatory from the term itself. Nothing much explanation for completeness. Under faithful representation dapat. No? Neutrality, information is selected or presented without bias, without self-interest and other interests or motives coming from the entity or the preparer. And lastly, letter C, free from errors. There are no errors in the description and in the process for by which the information is selected and applied. So completeness, neutrality, free from error, all under faithful representation. Okay? As you can see, walang nauulit na qualitative characteristics. The rest of the characteristics are enhancing. V-cut. Let's talk about the definitions. Verifiability. V-cut. So different verifiability. You can verify that the financial information you use coming from past one for the said entity is the same past one using the is the same past one used by the other entities within your industry. Verifiability. Different users could reach consensus as to what the information purports to represent. So if it is related to assets, of course, presentation as to financial position and the rest of the account titles or names. Letter C, comparability. O, hindi completeness ha. The completeness is falling a while ago under faithful. Again, representation. Yan. Completeness is falling under faithful representation. The C in the V-cut for enhancing qualitative characteristics is comparability. The information helps users in identifying similarities and differences between different sets of information. Comparability is comparable between the previous periods and within the entity, so intracomparability. But if with other entities related with your industry, intercomparability. So in short, the assets you presented with the financial position is the same assets based on the accounting standards presented by other entities, comparability. And letter U, understandability. From the term itself, you can understand, right? Because it's the term itself, understandability. Users are expected to understand the said information based on what you adopted in the accounting standards. Like, you know that past one is for the presentation of FS, therefore, it's about presentation, not about past two for inventories, diba? And the rest. And lastly, timeliness. The information is available to users in time to be able to influence their decisions. That's why a while ago, on the periodicity concept, diba, it is within the time bound of 1 year and so on. So timeliness, because how are we going to do our decision making if the transaction we are only accounting right now is happened in December 2012, whereas today is already June 2023, right? Timeliness. So within the time bound or period of time, we're going to report the financial transaction or financial information because the transaction occurred within the time period of 2023. So that's why we have the concept of accrual as well and the rest. So enhancing qualitative characteristics. Please remember the definitions. Don't get it interchanged. Yeah, those qualitative characteristics, I hope you get reviewed with everything from relevance down to faithful representation and the enhancing qualitative characteristics. Ha? Sana pag lumabas yung theories na yan ay napaperfect yun. Let's move forward. On the other side, the next side of the conceptual framework, very basic definitions of financial statements and what is all about financial statements. Again, nabanggit na to kanina. So the objective of general purpose financial statements is to provide, again, financial information about what? The 5 elements: assets, liabilities, equity, income, and expenses. Why? Because that is useful in assessing, letter A, the entity's ability to generate future net cash inflows, and letter B, the management's stewardship over economic resources. Letter A is talking about financial performance, future net cash inflows. Can you generate income? Letter A, financial performance. Anong financial statement siya related? Of course, ano natin? Financial comprehensive income. Letter B is all about financial position because it talks about economic resources. So of course, the balance sheet or the statement of financial position. So don't forget the objective and scope of financial statements. Let's have specifically first the reporting period. Ano banggit na natin to? At least there should financial statements should have at least a specific reporting period. If it's not mentioned is at least 1 year or 12 months. Is prepared for a specific period of time and include comparative information for the previous or the prior year or prior succeeding year at least for the said reporting period. Next, I think we're done with going concern assumption a while ago, diba? That whatever is the reason, there's no valid reason or cases that would say that the entity is under bankruptcy or will file for bankruptcy, we are undergoing concern assumption. Meaning, we should continue the accounting process as long as the entity is existing. Going concern assumption. Reporting entity, we mentioned it already. There are different reporting entities, but financial accounting highlights more with the publicly listed entities. So, however, the rest of the reporting entities definition, one that is required or chooses to prepare financial statements and is not necessarily a legal entity. It can be a single entity, of course, sole proprietorship, down to partnership, and the rest, or combination of 2 or more entities, business combination, consolidation, and merger, right? Reporting entities. Next, yan. Let's review back. What are your elements of financial statements? Marami pa rin nagkakamali dito. There are only 5 elements of financial statements. Of course, assets, liabilities, equity, income, and expenses. And nakasummarize na sa slide natin saang part ng financial status siya makikita. And of course, financial statement, financial position, and performance. Number 4 and number 5, we mentioned a while ago, income statement items. So therefore, they are the first financial position or balance sheet items are real accounts. Therefore, number 4 and number 5, income statements are nominal accounts or temporary accounts. Di ba? Balance sheet, permanent accounts. So, alam natin yan kanina. Definition na lang tayo. So, assets, please remember, there are a lot of definitions of what is an asset. But we highlight this is a present economic resources controlled by the entity as a result of past events. So, present economic resource, then it came from past events. Then, the economic resource is a right that has the potential to produce economic benefits. Coming from excerpt from Conceptual Framework, paragraph 4. If you will read Conceptual Framework, there are tons of pages. So we just summarize it in a few pages or slides here, guys. So this is the main definition of what asset is all about. So it came from past events or results from past events. Example of the past events, sale transactions. Because in sale transactions, cash or receivable arises. Tama? Every time we have sales. So it's a past event, the sales transaction. What is your present economic resource? Your right to receive a cash in the future, accounts receivable, notes receivable. The one you receive, the most liquid asset, cash, present economic resource. No? The 3 aspects, I mentioned already, the 3 aspects in the definition of an asset is you have the right, you are the owner kasi of the entity. If you are the owner, you have the said asset, therefore is the resources of the said entity. So owner, resources, assets lahat yun. Number 2, potential to produce economic benefits. The right has a potential to produce economic benefits for the entity that are beyond the benefits available to others. So such potential need not be certain or even likely, might be quantifiable or non-quantifiable kasi in the future aspect. So economic benefits. And number three, control. Of course, if that's what you own, if those resources are what you own, you can control such. You decide how to use the said assets, diba? So it's resources that you own, therefore you own it, so you control it as well. Liabilities. Of course, the liability is the counterpart of the assets. If assets are rights, liabilities are keyword obligations, of course. Obligations, present obligations. It came again from the past of the entity to transfer an economic resource as a result of past events. So those are the keywords. So three aspects: highlight obligation. RFBT, obligation is a duty or responsibility that an entity has no practical ability to avoid. Or it can be, obligations may not be just under RFBT or legal obligation, but might be constructive obligation, meaning it came from agreements or maybe assumptions within the different entities or entities transacted with one another. And transfer of economic resource. Why? Because you're gonna pay in the future, right? You can have an outflow of resource in the future. That's why the liability arises. The obligation has the potential to require the transfer of an economic resource to another party, and such potential need not be certain or even likely. What is important is that the obligation already exists, present obligation na siya, and that in at least one circumstance, you would require that there should be a transfer of economic resource in the future circumstances. Liability. Of course, we mentioned already present obligation that results from the past events or transactions. A present obligation exists as a result of past events if, letter A, the entity has already obtained economic benefits or taken an action thereof, and as a consequence, the entity will or may have to transfer an economic resource that it would not otherwise have had to transfer. Executory contracts, RFBT definition. So side knowledge for this one. Equity, everybody already have different definitions of what equity is all about. But CFAS only mentioned that any excess between assets and liabilities is a definition of the equity. Equity is the residual interest. So it's the excess, diba? Residual. The residual interest between the assets after deducting the liabilities. Or in short, sabi ng CFAS, equity or capital, the same lang yan, is equal to assets minus liabilities. That's it for equity. No other definitions. Income and expenses. Income, this time, you're not talking about past events. You're not talking about present obligations. Because if that is the definition, it's an asset. But as you can see, for the definition of income, those items or terms are not existing. Because when it comes to income, in its definition, assets or might be liability arises. Under the definition of income. Let's read. Income is increases in assets or decreases in liabilities, or those that result in increases net amount for equity, other than those relating to contributions from holders of equity claims. Or in short, other key term is inflows, no, income. Vice versa, reverse, expenses decreases ng assets and increases in liabilities that might result in decreases in equity, other than those relating to distributions to holders of equity or dividends na usapan. So expenses, other key term in short, outflows, no? Wala nang usapang present or past. Pag yun ang keyword, ang definition nun, in either in assets or liabilities, right? So recognition, this is the definition of recognition was mentioned in conceptual framework, the process of including in the statement of financial position or performance an item that meets the definition of one of the financial statement elements. So between the five, recognition, in short, you reported it in the face of the financial statements. There's an account title, then there's a corresponding amount. You recognize the said element, recognition. So for this criteria for recognition, an item is recognized if it meets the definition, kung anong element siya. If it meets the definition and letter B, it recognizes we recognize and provide a useful information, therefore, and it's quantifiable, it can be reported under the face of the financial statements, and the term for that is recognition of the said elements. No? Because if we don't recognize the said financial statements, the said items for financial statements, it might just be a note disclosure. Note disclosure, again, coming from notes to financial statements. Might be paragraph form or might be just supporting computations. Recognition criteria, part of it is relevance. So it is for under recognition side, of course, we already know if the useful information is a relevant one. Diba? And faithful representation, ayan, andun ulit si financial information, diba? Integrated with recognition. Measurement uncertainty. Just in case there's a measurement uncertainty, it exists if the assets or liability needs to be estimated. So a high level of measurement uncertainty does not necessarily lead the non-recognition of an asset or liability. Siyempre, when it comes to provisions and estimated liabilities, right? You estimate the liabilities because you try to already foresee that you will have a future obligation coming from the said event or transaction. So it does not necessarily mean that we recognize such or we don't recognize such. So in case of measurement uncertainty, we can still recognize those account titles or elements. However, measurement uncertainty can lead to non-recognition if the asset or liability, if making an estimate is exceptionally difficult. We need algebra, we need the other experts or fields to estimate the different amounts. So it's hard to find, and we need to use different equations. So the recognition ang usapan doon. And when it comes to the recognition, this is the removal of the previously recognized asset or liability you might sold already, or you might not be able to use already the said asset. That's why you derecognize such in the face of the financial statements. The recognition occurs when the item ceases. Ceases means to end, or you already cancel or end the definition of an asset or liability. It does not meet already it does not meet already the definition of the asset or liability. The recognition, you don't recognize in the face of the financial statement anymore. Moving forward, unit of accounts. Unit of accounts is the definition or right or the group of rights, the obligation or the group of obligations, or the group of rights and obligations to which recognition criteria and measurement concepts are applied. That's why we have an existing accounting standards separately connected with the different account names or titles, right? Like PAS 2, it's meant for inventories. PAS 7 is meant for statement of cash flows. PAS 16 for PPEs, PFRS 9 for financial instruments, and the rest, diba? So there are different various unit of accounts that have a specific applicable accounting standards, diba? Measurement basis, we're done with this one. So a while ago, we already mentioned the historical cost, current value, fair value, and the rest present value. So what is a historical cost of an asset? This is the consideration paid to acquire the assets. Take note, plus transaction costs. So don't get it interchanged. If it is a liability, the historical cost is the consideration received to incur the liability, but minus transaction costs. If it is an asset, plus transaction costs. Liability minus transaction costs. So historical cost is updated over time, and samples are depreciation, amortization, impairment, collections or payments that extinguish part or all of the assets or liabilities, unwinding of discount or premium when the asset or liability is measured at amortized cost. So historical cost features specifically for assets and liabilities. Okay, please don't forget the assets for historical cost plus transaction cost lagi yun. Liabilities minus transaction costs. Finally, the definition of fair value, kasi a while ago there's no definition specifically, but for conceptual framework, it was mentioned that this is the price that would be received to sell an asset. So on the part of the seller or paid to transfer a liability, in an orderly transaction between market participants. So an existing market, so seller-buyer relationship at the measurement date, diba? So the price stated by seller accepted by the buyer, fair value. That's the amount acquired by the said buyer, diba? For the said equipment maybe or other resources or assets, fair value. Or yeah, market price, fair market value, fair value, market price, everything is the same for the said concept. Value in use and fulfillment value, other definitions. Value in use is the present value of the cash flows or other economic benefits that an entity expects to derive from the use of an asset and from its ultimate sale. Fulfillment value is the present value of the cash or other economic resources that an entity expects to be obliged to transfer as it fulfills a liability. So some other definitions for measurements. Next one, current costs. What is the current cost? We mentioned already a while ago this one. So a specific definition for asset, the cost of an equivalent asset at the measurement date, comprising the consideration that would be paid at the measurement date. Again, take note, plus transaction costs. Pag liability, minus the transaction costs. Okay? Entry value versus exit value. Current costs and historical costs are entry value. Take note of that one. Kasi baka collectively termed for entry value versus exit value. Pag entry value, current cost tsaka historical cost ang usapan doon. However, for exit values, please take note, fair value, value in use, tsaka fulfillment value ang usapan. Mga present value, exit values lahat yun. Okay? Because entry value definition, if you want, they reflect prices in acquiring kasi. O kaya entry, acquiring entry values. Or incurring a liability. Exit, they reflect the price in selling or using the asset or transferring or fulfilling a liability. So in settling the liability or selling or disposing the asset. Kaya exit value siya, di ba? Present value, fair value, or value in use. Fulfillment values. So the conceptual framework provided us a guide to have the different considerations when selecting a measurement basis. So the guide is, it is important to consider the following: the nature of the information provided by a particular measurement or basis. So, and then the next one, the qualitative characteristics we mentioned, cost constraint, cost-benefit relationship, and other quantifiable or non-quantifiable factors, or maybe management decision or practices already of the entity. So those are some considerations. So nature and some other factors. When it comes to equity, it's not measured directly kasi nga it's the residual amount, di ba? Kung ano daw naiwan sa asset versus after deducting the liability. So it's just a difference. So there's no specific, sa theory, there's no specific measurement basis because it's just the residual amount, no, of what is found between the residual amount of assets minus liabilities. Equity is generally positive, although some of its components can be negative. Of course, we already know that net losses are reflecting as a negative balance for equity, just in case. For the next one, presentation and disclosure. Yeah, we mentioned a while ago presentation because you present, it's on the face of the financial statements. When it comes to disclosure, somehow reflected two notes to financial statements. So information is communicated through presentation and disclosure in FS. Effective communication makes information more useful. So additional knowledge for this one. Disclosure can be considered into, or can be classified into two. When we say disclosure, it can be disclosed under the face of the financial statement. It means the disclosure has an equivalent amount or value, or might be disclosed under the notes of financial statements. When it comes to the principles, as you can see in the slide, the objectives are specified in the standards. So kaya nga may mga standards tayong fina-follow because those standards should be specifically be followed for us to properly report those financial transaction information. When it comes to classification, classifying means combining similar items and separating dissimilar items. Classifying is different from offsetting, no? Classifying is a general procedure to really determine what are those items to be presented in the FS. Offsetting, general rule is prohibited. Offsetting of assets and liabilities is generally not appropriate. General rule yan. May some exceptions. Some exceptions would say that offsetting of assets and liabilities are allowed if they have the same, they have similarity when it comes to its nature. Like example, accounts receivable, contrary with its contra account na allowance for bad debts, right? And depreciation related with the different equipment. So it can be offset when it comes to presentation. But you are offsetting the cash you receive from the loans payable you have. No, diba? Offsetting, generally speaking, should not be practiced or not appropriate. Next one, classification of income and expenses. Alam nyo na sana to. When we say, before kasi, when we talk about basic accounting, we only say or delivered income statement. Pero when we reach past one, it was mentioned here, the classification of income and expenses are categorized, letter A, for profit or loss, or yung alam nyo ng net income computation. Tama? Or income statement presentation. However, there are 5 other comprehensive income items naman from letter B mentioned in past 1. I-reveal natin sa past 1. Yan. Pag pinagsama mo yung A plus B, dyan na siya nagpo-fall under statement of comprehensive income. Tama? So, someday when we reach past 1, it will be mentioned there as well. When we only want statement of profit or loss, the set statement should not be composed with, in addition with letter B for other comprehensive income items. Tama? Pag statement of profit or loss, hanggang net income lang. Pag statement of comprehensive income, the 5 OCI items should be included. What are those in past one when we reach there? Okay. Aggregate. Aggregate is sum up, adding together of the different assets or liabilities. Definition. Equity, income, or expenses that have shared characteristics and are included in the same classifications. And finally, the last part of the conceptual framework, concept of capital and capital maintenance. Just please remember this one because sometimes students tend to, again, be disrupted with the definition. They classified the financial aspect definition into the physical aspect. Okay. Financial concept of capital said, as mentioned in conceptual framework, capital is regarded as the invested money or invested purchasing power. Capital is synonymous in this capital concept with equity, net assets, and net worth. Net worth. Therefore, if in your basic accounting days, you are computing net income, therefore, you are using the financial concept of capital. However, if it is physical concept of capital, capital is regarded as the entity's productive capacity based only on such units of output per day, cost of units, or manufacturing cost per unit, and some other quantifiable measurements, physically, beyond the financial aspect. So, like in managerial accounting and on the economic side and financial management, they have different ways to measure the financial status or financial information to be reported. Physical concept, kung ibang, if they use different aspects of computation for financial information. So, in short, we are using financial concept. You are using cost of goods sold, you are doing equity, net assets, net worth, financial concept. But the rest for other integration of measurements, physical concept. And if it's not stated, we are using financial concept of capital since basic accounting days. My presentations ended. Let me read the chat box. No, I don't want to read the chat box. Mukhang may mga nag-uusap dito. Okay. Nothing much. Ayan. So, my presentation's ended. I prepared here a simple quizzer for us to wrap up everything. Are you guys ready? Can we do our quizzer? I'm just gonna flash the questions, read the questions, and I want you guys to participate by answering via our chat box. Okay? Wait lang for a while. I'll stop the recording. We can have it in 5 to 10 minutes then. I'll before the time ends, I'll share to you the Google form for the attendance for this session. Wala pa po, bakit meron ng ibang